Welcome back guys to another video. In today's video, I will be discussing where the housing market is heading in 2022 after the Federal Reserve has raised the rates by 0.75 basis points. And I will also discuss how the Federal Reserve and Chairman Powell have decided to influence the economy. And after that, we will discuss how this rate hike is going to impact local real estate for sellers and buyers. So you definitely want to stay till the end. So let's get started. So this is the largest rate hike done by the Federal Reserve in the last 28 years. When I say the largest, I mean an incremental increase in one time. Yes, rates have been higher in different time periods, but at one time, they've increased rates by 0.75%, which is a large number. So today is the 16th when I'm shooting this, June 16th, and the Federal Reserve have raised the rates just in the beginning of this week, and rates on average today are sitting around 6.25%. Earlier this week, Chairman Powell had a press conference in which he made some very, very important points that tell us where this market is headed and how the Federal Reserve is trying to influence the economy. We're going to dissect 3 or 4 important parts from that press conference to make a conclusion on how they are trying to impact our current economy. Their main goal right now, guys, is to really slow down the cash flow in the economy. Their job is to not allow this inflation that's at a record high right now to get ahead. So they're doing everything in their power to slow down this flow and slow down consumer spending so we can get ahead of the curve right now. Job market's strong right now, and it's a strange time. We came out of the pandemic, supply demand's all skewed, and now we have inflation on our hands. So let's get to the board. So Chairman Powell made a lot of comments at the press conference, but I took out the ones that I felt really hit home and I felt were very important for us to look at and discuss today. Number one, he talked about he's really unsure what these rates are going to do to the real estate investor market. He didn't really comment on that. But why I feel he's saying that is because when the rates are going to go up, a lot of investors are going to sit on the back seat and just kind of be on the edge about buying homes because there may not be enough cash flow for investors to go buy real estate to put homes on rent, because if the rates are already going to be at 6.5%, 7% moving towards the end of the year, it may not make sense. So those were his comments on real estate investors. Then moving forward, he said there's not a lot of finished homes. When he says finished homes, he means homes that are existing, not new construction, so resale homes. There's not a lot of inventory for those types of homes, and that's been evident for almost the last year and a half, 2 years, ever since this frenzied supply demand started, because a lot of sellers don't have anywhere to go after they sell. Either they're buying a house at a very high peak, or the rates are really high, or there's just not enough inventory for them to shop around. So that's what he's talking about there. And then he talked about how home buyers need a reset, and here he really talks about the first-time buyers. And he makes a comment that, even though the job market's really good, a lot of first-time buyers are struggling right now because home prices are sky high, and a lot of first-time buyers just don't have that high down payment, or just are not getting qualified, or are going up against multiple offer situations. And before we saw, in the market, some cash is not really happening right now, but it's really a tough market for the first-time buyer, which he wants to emphasize that he wants to help home ownership, help first-time buyers, and make more people homeowners in this country. So the reason why he made these comments is it's his hope that by slowing down the market, by increasing the rates, hopefully we can get into this more normalized market where it's not going to be a dog-on-dog mentality. It will be less competitive, where more people will have a chance to get a home in this market. And then he talks about the housing market settling down, and then rates coming down. Now, don't paraphrase these. You can watch the press conference, but these are very important points that I took out. So what he means by that is he's hoping that by increasing these rates and slowing down the real estate market, he hopes that it will settle down where it'll be more of a sort of an equilibrium. It's not going to be a crazy seller's market. It'll be not a buyer's or seller's market, more of a balanced market. And once that happens and like I mentioned earlier, that the Federal Reserve's main goal is to control inflation right now. And once they're able to get control over that, and we can get a more normalized market where buying sort of like this frenzy slows down, I believe he's indicating that in the next 2 to 3 years, if we're able to control inflation, the rates will come down to a normal number. He didn't indicate to where they're going to come down to, but they did mention they may bring the rates back down to more of a healthier number. So how does all of this impact the local real estate market? Well, number one, what this is going to do is it's going to really deplete the buyer pool that's out there, because as I mentioned, the home prices have not really dropped, but these rates are headed to go even higher, and right now they're sitting at 6.25%. So a lot of people that were on the verge of qualifying or were barely making it are going to be plain and simple priced out. So it's really going to deplete the buyer pool. Number two, you may start to see more inventory coming on the market because a lot of sellers are going to believe now the market may slow down, so they may want to take advantage of the selling market right now and not wait next year or the next 6 months. Now, this inventory is not going to come from owner-occupied homes. It's going to mainly come from investors that are looking to make a quick buck on their investment that are not living there. Because remember, homeowners are not going to really have a place to shift because the rates are so high. So someone that owns a home is going to have to think twice, hey, where am I going to go after I sell my home? So you will start to see more inventory from investors and probably less inventory from homeowners. So I'm not sure if this is going to be helpful, but it's going to slow down things. Number three, construction of new homes may also slow down if a lot of buyers that were in contract now are not able to qualify and not able to afford these homes, and you're starting to see a lot of fall offs happening with new construction, or if people are just kind of skeptical about the market and they don't want to buy homes, even new home construction companies may stop or slow down their production of new homes because the market is just not right for it, because there's not enough buyers out there, because a lot of them are not qualified. And just there's less interest out there. So in a nutshell, I believe all of this is going to cause an overall slowdown in the market. Slowdown in the sense that less buying happening, slightly less buyers. Maybe inventory may take a little bit of a hike right now because a lot of investors are going to come out in the market to put homes on there. So we will see that buying slow down in the next couple of months, and the market's sort of normalizing a little bit. We're not seeing crazy price increases of 20 to 30% appreciation, maybe more towards the 2 to 5% appreciation, and not multiple offer situations happening. There still will be serious buyers out there, but we're going to start to see a slowdown. Now, real estate is a lagging indicator, so these changes are happening now, but we're not going to really see the data probably until the next 2 to 3 months. So it's going to be an interesting time right now to see what happens and what the data looks like 3 months from now. That's all I have for today, guys. I hope this was insightful. Like always, I love bringing this content to you. Please hit the like button, subscribe. I love you guys. Thank you for watching my content. Until next time.